Hey, welcome, welcome, welcome. Come on in, come on in, come on in. Make yourself at home. Hopefully, you had a wonderful day. Of course, my name is Sean Hill of SeanEHill.com and IncreaseMyChecks.com. And I just want to share some information with you. Of course, if you're watching me on Facebook, you know what to do. Those hearts, those likes, those thumbs ups, all that good energy. Get into the comment section. Say hello. I'd love to hear from you. Also, you're watching me on YouTube, you know what to do as well. Like, comment, and most of all, subscribe. And when you do, make sure you hit that bell. Well, tonight, I always start my programs when we're talking about finances like this. This is for educational purposes only. Please, 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 always make sure to consult a financial advisor if you're going to make financial decisions. With that being said, let's jump right into the 5 emergency ways to, let me pull this up here. Just had it here. All right, 5 emergency cash sources to avoid a high interest payday loan. Of course, we know life happens. Life happens to all of us. And no matter how much we plan, you know, accidents and emergencies strike. And so, what I want to talk to you now is that many times when we have these unfortunate incidences in our lives, we have to reach out for that payday loan. But the bad part about that is they come with high interest rates. And for some reason, with that high interest rate, the balance just keeps growing and growing and growing. And what many times happens is people get on this bad cycle and they go from one payday loan to the next payday loan until they're in a really, really serious condition. So what I want to talk to you about tonight is count them, 1, 2, 3, 4, 5, 5 ways that you can, or 5 sources that you can use to avoid high interest payday loans. So the number one source is a home equity line of credit. Now, this is a hassle-free way to raise cash fast. Now, the downside, of course, as it sounds, is your house is collateral. So if you don't make the payments, you could lose your home. So this is something, none of these are to be taken lightly. So you really want to consider, is this something I want to take advantage of, even if I can do it? Because having your home as your collateral could be very, very nerve-wracking. So that's number one, a home equity line of credit. Number two is a 401k loan. Now, many of you have 401ks through your employer. One of the features of these plans is the ability to borrow against the balance in the account. Now, each 401k plan is different. So if you're going to go this route, please make sure you check with your employer to see how, what the best way is to do that if that's something that you decide to do. Now, here's the deal about that. Many times you can borrow up to 50% of the value of the loan up to 5 years without penalty or taxes. Now, you have even longer if you're using this loan to buy a house. But of course, if we're talking about emergency, we're not talking about buying houses. So I just want to put that out there. The good news is that you're borrowing your own money and you're paying yourself interest back. Now, the bad news is that many times while you're doing this, you're not able to contribute to your 401k. Also, remember, as you take that loan out against the 401k, that's money that's not working for you. That's money that you don't have growing for you. And another downside can be you can only take out, depending on the plan, a certain number of loans. So let's say, for instance, your plan, you can take out 3 loans. Well, that's the maximum that you'll be able to take out at any one time until you pay one of the loans back. So you really, as I said, with all of these, you really want to do your due diligence. You really want to make sure that you know exactly what you're getting into as you're taking out these loans, or as you get into these emergency. Like I said, that's the key, is these are emergency sources. These are not sources that you want to take all the time. So jump into the comment section. Let me know if this is making sense to you, if you're getting some value from this. I would love to get some feedback from you. Okay, so number 3 is a Roth contribution. You can withdraw contributions to your Roth IRA at any time without penalty or taxes. So far, so good, right? The downside is that, kind of with the 401k, as you do this, by doing this, you lose the ability of the money to grow tax-free for the future. Because with Roth IRAs, once again, you pay taxes. This is after tax, right? So you put in there after tax. So you're not getting taxed now, you'll be taxed. I'm sorry, you're paying all the, I've already paid taxes on the money. So when you go to take it out, it's tax free. As you dig into that and get that money out, now, once again, you're hurting yourself for the long run. But we did say these are emergencies, right? And hopefully, quickly, you'll be paying them right back. And that's number 3. Number 4 is the cash value from a permanent life insurance. You know, if you have this type of policy, you can access the portion of your cash through a policy withdrawal or a policy loan. Now, the good thing, well, the thing about it is you have to pay interest on the policy loan, but there's no repayment schedule. So unlike unlike the with number 2, which is the 401k loan, normally there's 5 years where you have to pay that 5 years or less, right? 5 years or less. With a permanent life insurance loan, there's no repayment. There's no amount of time when you have to pay it back. Here's the challenge with this, though. If you die with the loan outstanding, the amount will be subtracted from the death benefit, but it's not going to be taxable. So that's a good thing. Of course, you'll be gone, so which is not good, but at least that part won't be taxable. Here's the thing. If the policy lapses while you're alive, though, the loan becomes a withdrawal, so it converts to a withdrawal, and any money you receive beyond the premiums, you'll be taxed on, will be paid, will be taxable. So just really be aware of, if you do this type permanent life insurance, that you stay on top of those premiums, those monthly payments, so that it doesn't become taxable. Okay, so that's number 4. So number 5 is HSA withdrawals, those health savings accounts withdrawals. We're about to head right back into open enrollment. So this is going to be a great time for many of you to take advantage of a health savings account. Now, this is the health savings account that usually has a high deductible health insurance policy. You can make tax deductible contributions and withdraw the money tax-free for qualified medical expenses. Now, but if you have used other cash, so if you use other cash to pay for your medical expenses, that's fine. Now, in an emergency, if you have, the receipts and everything available, now you can go ahead and get that cash out. Many times people use this account as a forced savings or a piggy bank. The thing you want to remember, though, is make sure that you have the receipts for qualified, this is the key word, qualified medical expenses. So that's the key word there. So make sure that with any and all of these, that you do your due diligence, get with whatever, whether it's going to be your 401k, your HSA, your benefits department, get the details before you get into a bad situation where you actually will need to take advantage of some of these. Well, hopefully that you won't have any emergencies. I know none of us want to have these things, but life happens to all of us. And so I'd much rather have you prepared and have you, prepared to get it and already have it than have you not knowing exactly what you need to do to make sure that you have the money you need when you need it. As I said, this is Sean. And what I do is I help people maximize their paychecks. So if that's something that you need to do, just go to www.increasemychecks.com, get the information, or you can DM me on Facebook, and I'll be happy to get back with you. And as I said, if you're watching this on YouTube, if that brought you some value, give me that likes, that thumbs up, all that good stuff. Make sure that you subscribe to the YouTube channel. All right. Well, I want to say I hope you have a wonderful rest of your evening, and come back in about, I would say about 50 minutes when I'm going to be talking about, well, not me, but I'll be presenting a way you can increase your paycheck. Talk to you then. Have a good evening. Goodbye.